Well, if a pedestal of original thinkers is ever to be made, there is one name which will find out you will always find it on the pedestal, and that is Manish Chokhani. Over the years I've interacted with him. It's just been a pleasure to understand the ability of Manish Chokhani to connect the big picture and with his understanding of valuations and what it means for your portfolio. So on a birthday, well, while all of us are getting older, look at Manish Chokhani.
Getting even older.
Yeah, you are looking younger and younger.
He's just back from a nice US holiday,
back
right?
from a holiday.
Recharged.
Actually, Canada.
Even better.
Switzerland. So even better, mountains and
Atiti
lakes and
Devo,
everything.
Papa, India is where everything is happening. You go outside India. What is this?
No, but it was a chance to go and meet people and see what's going on over there. So,
So
from
what
that
is
perspective,
going on
it was
there? Because
fantastic.
India is really the buzzing place. You know, I mean,
Yeah.
we were chatting with Atul Suri and he said, you
Yeah.
know what, the world market's at a 52-week high.
Right.
We're the only ones at a life high.
Yeah, that's right.
So what is the world saying about
And even
us?
that 52-week high in the US, when you go around and see the decay in my favorite places in the West Coast and even in fact on the East Coast, it's what I call a phase 5 in Suri language, where it's narrow leadership, the 7-8 stocks or whatever, Fang Mant or whatever you call it now, are holding the market. The 490 are actually not doing so well. But it is a life cycle of countries, and clearly, as Larry Summers very famously said, that Japan's a nursing home, Europe's a hospital, China's a jail. So it is that sort of a world, and events couldn't have come together better for India to finally have the tailwinds, which, you know, always the bear case for India we used to make was always the macro, and the bull case was always the micro. Bottom-up stories. But this time it seems to be a confluence of things coming in favor of the country.
So is India the baby or is India the teenager or adolescent?
India, I think, long runway ahead.
Yeah.
Events and also actions that have been taken in India over the last decade or so are all coming together. If you think of it, if COVID had hit and then the Ukraine war had hit, and we spoke also during that period, it was just so uncanny what blessings we got. So in a very odd way, you get oil at a very cheap price. Otherwise, with the oil shock, you know, God knows where the economy would have gone. So it starts from there. Also, during that period, India had made all these supply side reforms. So from a very extractive type of economy where you went after 5 million people and extracted more and more out of them, this government has certainly gone after supply side to increase velocity. So whether you're building infrastructure with road, rail, port, all of that, or you're doing GST to enable, you know, movement of goods faster, or the Jam Trinity to, you know, put money into poor people's hands, giving them their LPGs, electricity connections, water, literally that Bijli Sadak Pani which they never had for years, bringing them to mainstream. And then along with what happened on our broadband telecom side and the financial side with the India stack, it is just staggering to see everything coming together. And sometimes you say you make your luck and wait for the right time. I think India has made its luck and the time is here.
Manish Chokhani uses this very famous line, which is that markets always vote for rate of change.
Rate of change.
The rate of change is getting from good to excellent.
Absolutely.
And that's what markets are voting for.
That's
but when you are investing, it's also about understanding the prices at which you invest. The fact that we're at an all-time high, the market cap is at an all-time high, we're the 5th largest market in the world. How much of this temperament of good becoming excellent is something
in the
which
price?
is baked in?
So very, very fair question. And again, when you look at people outside, they're very enamored by the Indian consumer. So you will find all the consumption stocks, the discretionary stocks are all pricing in 10 years of growth. I think the pricing is wrong there. The thesis is correct. Eventually we'll have a J curve. But before we get there, we need to lift that per capita income up, which we are stuck at whatever, $2,500 or whatever number. But before that is to happen, a lot of the jobs in manufacturing, the jobs in infrastructure, the build out of India has to occur. So if you were to kind of phase it, the next couple of years is really the period of infrastructure, capital goods and defense, railways. All these companies are really going to benefit a lot. And I don't yet think the prices have captured that fully. As you continue, again, our old theme, the financials, are at the center of everything. So while the last few years they've all gone after the retail guys, I think this whole corporate banking, the PSU banking pack, if you take the top 3 or 4 banks after SBI, they're all in 30,000 crore type PPOPs, looking evident, which are large numbers. SBI will be north of maybe 1,25,000 crores. I don't know. I think you just interviewed the chairman. The numbers are going to be staggering coming here. HDFC itself will be probably close to a 1 lakh crore PPOP. So the numbers that will start coming out are going to startle people and shock them. And therefore, things which have kind of underperformed, think, oh, everyone owns banks and financials are over-owned, overexposed. I think over the next 4-5 years, the leadership of this market will be very, very strongly with this entire group.
So if I say that banks is a consensus buy in terms of a view,
Sure.
but it has not reached consensus pricing, will I be correct?
I think, see, look at it this way. Everyone knew 10 years ago that Amazon, Apple, Microsoft are spectacular. And yet the biggest wealth creation came there because the percentage churn
Great point.
on large numbers, the delta that you make on the wealth is, sometimes you miss the point on just looking for percentage gains. But on a large position, if it then multiplies from there, the absolute impact on your portfolio is very, very large. So today, it's become very popular that, oh, you must keep churning and moving, or it's a technical trade that HDFC Bank will see selling pressure and so on, let me get out. Or PSU banks are now done and so on. All
He
these
tracks it all up.
all these favorite PSUs
Even on holiday he was working.
around 4-5 multiples on current earnings, and you haven't yet seen the acceleration which is happening here. If we all believe that we will get to 5 trillion and we continue with this 20% type saving rate, it's $1 trillion of saving, and we are financializing the economy, and we've got RERA in where now you can actually build the whole mortgage business out as well, so you don't need to put hard cash down for everything. Just imagine the staggering numbers that start coming out over here. And really, for the growth of the country, you need construction, real estate, infrastructure spends, because they create jobs, they consume steel and cement, and that starts lifting then for the workers the per capita income, which allows them to go buy eventually then the cars and the ACs and the fridges. So I think that cycle has started. We're in good shape.
That's what we were discussing outside the studio as to how the market has become narrow. Your reliances, HDFC Twins, TCS, Infi are not performing.
Right.
It's actually your defense, railway stocks, infrastructure. That's the hot spot, right?
So it's the nature of our market for long that 30 companies are 50% of market cap, and it's been that way for long, and it has to broad base. You won't get to $10 trillion market cap with the same 30 companies, and it will churn. But having said that, it's these 5 sectors, if you think of it, energy globally. So whether it's Reliance, ONGC, Coal India, NTPC, utilities, I mean the profit number is there, the market caps may not be necessarily all there. IT, banking, metals, utilities. These are the 5 which are 75% of India's profit number. The next set is really where the interesting stuff is, which you mentioned, infrastructure, capital goods, FMCG, pharmaceuticals. Those now need to start coming and playing, a larger role. But see, in a bull market which has a long, long way to go, it will rotate. You can't have the same set of companies or sectors running every month. So there will be periods where they kind of take a pause, and then you'll get all your technicians coming and saying, look, it's consolidated for 1 year or 2 years and therefore it'll break out. Eventually the IRR catches up to the ROE of the business. So I think that stage is being set very well. So this market, if you step back, this is not going down. I don't think anyone can make a case to say this market's crashing and it's overpriced and ahead of itself. So at best, you'll see the index consolidating, which is what we think as well. But the underlying breadth of the market is so strong because the profits are now spreading across the economy. And that's what then starts lifting the market to higher and higher steps as we go along. So honestly, in my 30 years, this is the first time where you feel every sector can participate at different points in the cycle.
But is this the new India, the underlying broader markets that you're talking about, defense, rails, manufacturing, infra?
Yeah. I think it is because the government's also got its act together for the first time. And we are probably a 1 week premature to say what comes out of the US. Now, just as an example, and I don't own the company, though I think highly of it, if you come back with a tech tie-up for aircraft engines and it goes to HAL, then it can't be a 20p stock. You may say it's a PSU, but then you've got 5-7 years of runway ahead of you when earning compound, and then terminal value views change very quickly and stuff like that.
There is this old school view that avoid PSUs. Capital allocation is pure.
Last 2 years we made out like bandits on PSUs, so
you can still make money in PSUs.
I think you can
now?
still make money. So I don't make the case that these will trade at 30-40 multiples, but the fact is the government. Okay, let me step back even from there. I say when you looked at the budget of the government every year, you said what the hell are they spending these subsidies on, because nothing's reaching the end consumer. Now with that same amount, if you're able to get that money reaching the end beneficiary through your JAM Trinity, the quality of expenditure has gone up. So the efficiency in a sense of the government has gone up. When you see our tax returns, given the way things used to be run in the past, and you see the rate of change today with faceless assessment and getting your refunds quickly, there is efficiency all around. And that same thing has applied to PSU. So maybe the same set of officers is now looking at things and saying, I'm going to be measured and I'm answerable. The same PSU banks which we hated 4 years ago are delivering these staggering numbers. It's the same people. It's just the attitude, mindset has changed. And it's not like every PSU is bad or every MNC is great. There are good managers and there are bad managers everywhere. PSUs happen to occupy what we call oligopoly type businesses. So the characteristics were always there. It's just maybe the intent or the energy was missing. With the outlays which have now happened, like you saw the railways outlays doubled. Roads are going absolutely crazy. Probably the only place we'll catch up with China earlier than 15 years will be roads. Railways, port, like it's happening all across the board. So if someone feels I'm being measured and someone's looking out at what I'm performing and therefore the rewards will follow, there are PSUs which are doing well and some which are going to do even better from here.
What is your understanding of this AI cycle and what means for Indian IT sector?
So AI is, my son puts it well, that we are becoming more and more superhuman. So AI is the final frontier, because say with robotics and sensors, you are replicating your arms and limbs. With material science, you are replicating what is happening to your skin and so on. With energy and storage, you are replicating what your heart is doing.
Iron Man, right?
And with AI, it's the
With
mind.
computing power, computing power, and then the bandwidth is really your nervous system going up and down. So with computing power, how fast your brain can process. But now with AI, you multiply that manifold. And if Elon Musk is right and we put Neuralink into our spinal cords, you are one of the Avengers then. So you do become superhuman with that. And like with most things, you can argue it can be the end of humanity, but electricity could electrocute you and kill you. In theory, the nuclear, fission should have destroyed you years ago. By the way, there's nuclear fusion now coming.
Yes, I've heard about
So if you put those together, you basically create your own sun. So energy will be free. So, I mean, as an aside, imagine what that does to India. When you get that sort of energy cost decline with the way solar costs have gone, storage costs have gone, what's going to happen with the hydrogen economy. It is staggering that the rate of change over there is fantastic.
And also sorry, go ahead.
Sorry, just to complete your AI point. So if like the Indian IT services, I think the fear is that all these coders will be jobless.
Yeah.
But with AI, the way it's going right now, you don't know what they are doing behind the scenes. So you'll need an auditor in a way to check what they've done. Secondly, the bottom end coders you may not need, but at the same time, if I can basically improve productivity of my programming, it allows me to go deeper into the market, right? So now instead of saying I only want to do Fortune 500, they could pretty much go into all the MSME also of the world with, literally short form program, because these are generative. And you can, on the foundation, you can build specific use cases and build up from there.
Have you been chat GPT?
It is transformation. Yeah? It is, the way, when personal computers came out, or then when the internet came out, this is that moment. Yeah. This is transformation.
Okay.
Also what's transformative is, like we were discussing, how the traditional Indian business houses are also transforming and evolving. And you coined this term, right? BATAJ,
I don't know. I don't know how to put it.
I don't know how I'm supposed to say it.
It was just an easy way to remember.
The Birlas, Adanis, Tatas and Ambanis, the way they are also evolving.
And Jindal,
Yeah.
So all of them are actually morphing from traditional businesses to new age businesses.
Yeah.
And it's the old metaphor where in the US you grow tall like a sequoia tree and you go deep because the economy is very broad based. So you have to specialize in something. In markets like ours where management skill is really the missing link, you become the banyan tree and you spread across sectors. And then you can start going deeper there. And fortunately, they're all going into non-conflicting domains in a way.
Yeah.
And with the management skill they bring in, hopefully they allow a lift off in the economy. So at one level, it's these 5 or 6 big business houses. And at the bottom, you have these 250, 300 unicorns. So the spirit of, I think, enterprise being unleashed in this country is staggering.
Aisha, every anniversary we speak about a corporate group. Last anniversary we spoke about Adani. I think on our 12th anniversary we spoke about Tatas.
Right.
So which is one corporate good we should speak about today? where you think there could
Speak
be
about
re-rating?
Jindal today, so because we
Can
haven't
that be the
covered them in
transformational group?
because all of them, what they've achieved is just staggering, and what
Well,
they're
separate
also
brothers.
poised
I
to
mean,
achieve.
they are not like Tatas.
One unit.
Jindal is
Yeah.
separate. So which
Right.
one?
No, I mean Sajjanji is obviously the one we love the most. Not that we don't love the other, but it just, and the humility of the man is also to get the ENY award in Monte Carlo.
But the fact that he's now looking at buying 40% stake in MG Motor, do you think they're trying to replicate an entire EV system?
So I think some of this is also India finally putting its foot down to say if you want to access our markets, you must have local wealth creation, which 15 years ago, you'll remember we used to cry ourselves hoarse on your shows
Yeah.
when you were just starting out. And we're just opening the market and giving it away to people. So I think it's a bit of that, and this may be the beginning of that, because you can't block the entire country from saying you can't come into India, because at some level you want the tech. And for example, in EVs, they are the leaders in the world, and you would want them to come in. And if they're coming on terms that we want, it's probably a good thing. I would also just fail to, if we don't mention the Apple moment in India, is staggering for what has happened. And I think it's as transformational as when G came to India for software services. Okay. So Apple's come in and already they are on a run rate of $10 billion exports from India this year.
iPads are also coming soon. iPads would be made in
their
India.
stated ambition is to go to 100 billion exports.
Such a
Now
great.
imagine what it does for the ecosystem. So when a Maruti came, you know what happened to the auto and ancillary industry. When G came, what happened to the whole software services industry. I think the next generation of kids coming out of college will not want to go to software, they will go to hardware. Because that's the combination of
benefit?
hardware and software together.
It's a great point, such a fabulous point.
Yeah.
Maruti comes, auto
Yeah.
ecosystem gets created. By the way, we are highly competitive there. Right.
Yeah.
ITG, thank you, Jack Welch.
Right.
God bless you. You got a call center in India, ecosystem of
Yeah.
IT got created. Apple's come to India.
And you see beneath the surface what's been happening to the EMS companies.
So is that the new theme now? Now next, like
It's
Ramdev
been
ji
the
says.
theme. I mean, we've all been buying it, participating in all of them. So 5, 6 of them, and they're still at the bottom end of the sort of value stack. But when the Tatas will put up their semiconductor stuff, and we start going deeper into that ecosystem, it's inevitable because whatever we are importing today, in 10 years we should be exporting that.
When we are already exporting, mobile phones.
Yeah.
My next question is about the large profit pool in India financials.
Yeah.
Second, I would imagine would be IT, and third would be energy.
Yeah, these are by and large
These are by and
the
large
big
themes.
chunks.
We've discussed IT, we've
Yeah.
discussed banks. Now let's understand energy. That's where the transition is happening. Solar prices have come down from 15 to 3. I've been told from 3 could go to 2.
Yeah.
What is the best way to participate for an investor? Because energy is where the real change is happening.
It's when the internet came, you didn't have to buy internet stocks. You bought the guys who benefited from that cheap internet. So it's the same with energy, that India is the worst affected country in an energy crisis historically. And now when energy prices, well, it's not imminent, it won't be in 2-3 years, but say you're talking 2030, imagine what it does to your balance of payments, because that 6% import bill hopefully vanishes if you're creating your solar and hydrogen locally. And maybe, like I said, from an importer, you become a net exporter of energy. Because solar, literally 1 hour is equal to all of mankind's needs. And the problem was on storage technologies. And even in storage, if you start creating this hydrogen thing, and today the cost curve is very high, but the stated goal of all the Reliances and others is to get it down to that $1 price point. It has transformational impact. So industry after industry, which you think is highly energy intensive and we can't participate over there. Just for example, and I'm not making the case, but let's say aluminium is considered to be highly energy intensive.
Yes.
Aluminium is the metal of the future because you want to make aircraft or lighter cars, a lot of your consumer products and so on with that. It changes the dynamic of the industry. You always had the bauxite over here. You always had the limestone over here. Now you have the cheap energy. Do you become the hub for the world? So industries will just transform. And therefore this confluence of technologies which are coming and hitting, it's just so fascinating to see how these can transform, and all you want is to be with the smart person who's running those businesses because they know how to surf the waves. Elsewhere in the world, if you went and you said there's Wells Fargo and JP Morgan, but they are ossified and the fintechs are coming and disrupting them, the good news is in India we onboard them. So the fintechs have been taken inside the banks over here.
Yeah.
Same way, new energy has been taken inside the old energy company.
Yeah.
And they are the ones leading the charge. So they're not getting disrupted in a way. They're sort of morphing and riding the wave. in a very different way. To give you the example, if you think of the old Kumar Mangalam Indian rayon business and how they transitioned from there to the new age businesses of fashion, the financial services,
Yes.
and so on. It's that sort of transition happening across these business houses and across the country. So really, really good space.
Absolutely. What could spoil the party for us?
Well, we usually hit our own self goals. So the world will continue to have its mess and its schizophrenia, because this money printing, which they've unleashed, has created a wealth effect. So the central banks have lost power to actually cut inflation. And with what they're doing with trying to get rid of China in the supply chain, how Britain has got out of Europe, these are fundamental bottlenecks to trade. And whenever you stop trade and you put toll nakas in a way, you have inflation. So they are becoming like the old India, where there are blocks everywhere, and therefore these prices aren't going down. And you've created so much wealth effect for the generation, what I call the baby boomers and Generation X, which has 75% of the wealth. So it's a bit like interest rates going up, it's not going to affect my spending, because I'm now consuming out of wealth, not out of income. That's the case in the West. So whatever these central banks do, they're not going to be able to curb inflation. So rates are going to remain higher for longer. We have to wake up and realize we are buying these stupid notes which they print every week. Should not be part of our reserves. If we're going to be the third largest economy in the world, we need to be part of a currency which people are happy to hold and value. And we need to stop this obsession of 1991 that we need $500 and $600 billion of reserves. You can't have 15% of your country's money blocked in an unproductive, depreciating asset. And I don't even call it an asset. It's like a Bitcoin actually, to be holding a dollar or a euro or a yen. So some goal, self-goal like that, or obviously with politics here, you don't know, we have election coming next year. Everyone thinks it's kind of a slam dunk, but who knows. And then you go back from supply side to chaos. Confidence changes. And look at the case what's happened in China, right? So they had everything going for them. This war actually played to their advantage, because now they had Russia in their pocket and the whole world is trapped because they can't get goods for the next 4 years if China stops supplying. But they've gone and created self-goal by putting uncertainty by what they did with all the entrepreneurs there. This common prosperity, then how they've clamped down on dissent. So the uncertainty that they put in mind of entrepreneurs and consumers has actually whacked that economy. And this overstimulation of the economy with infrastructure and real estate spend has resulted in a banking crisis. And the shadow banks are in big mess over there. So China being like X growth is a problem for the world. And that starts causing pressure, because now they'll be dumping stuff for chemicals or metals and so on at stupid prices, which if we take advantage of and lower our cost of production, do we become competitive? So it's all like a story which you see, and you see how it unfolds and you react accordingly.
So I'll take the clock back to financials again. And the first port of call is you buy large banks. They have the right to win, and they have advantage in terms of having a real CASA dominated franchise. But minus banks, AMC stocks are not doing well. Insurance stocks are not doing well. And fintech are just about getting their definition right, that they want to be loss growth dominated or they want to focus on profits. Apart from buying large corporate banks, what are the other plays in financials?
It's banks depends on where you are playing in the cycle, right? It's like when you were playing IT, it's not that you only bought Infosys, TCS. You could go down, you could buy the Mindtrees, or you could go down buy the L&Ts and the Persistents and so on. So similarly with banks, the space is so large that, I mean, again, there are a couple of mid-cap banks that we bought, which obviously the rate of change is much faster, and you make a lot more percentage gain there. But when you want to just keep money, how do I say, stacked, that you're happy to compound 15%, you don't care what happens, maybe 2-3 years, then it catches up 50%. It's good enough for some. So depending, what stage of your life cycle you are and how you want to play, there's just no dearth of opportunity. And while we may think of 3, 4, 5 large themes, and within that you're, putting things in the right order, nothing stops you. There's so many good businesses. We spoke last year about, I think, Gravita as an example. It's something we own, so I'm not suggesting you should buy it, but it's got the whole ESG tag ready. They're recycling the worst product, buying the worst thing that people want to dispose of. There's unlimited runway for capacity growth. You can go across multiple products over there. So it may not be part of some big thematic scheme of these 5 big macro trends. But individual stocks, there are just so many in India, and the entrepreneurship is so alive and kicking. I mean, if I were 15 years younger, I would be out there visiting 500 companies.
We are 15 years younger, hopefully you can tell us.
So please go visit. No, the thing is, look, you make money with the conviction you have.
Okay.
And ability to sit on something. And Nimish Bhai famously said, activity and achievement are not related. So you don't need to keep going in and out of stocks.
Activity and achievement are not related.
related.
Wow.
So think of it. The wealth of, say, NM Group came out of sitting on Infosys for 15, 20, 30 years. The wealth of Rakesh ji came out of Titan, sitting over it for 15, 20 years. Even I would argue today, Warren Buffett, 50% is Apple.
What's the stock that you've been sitting on for last 20 years?
Nothing, sadly. Otherwise, I wouldn't be in the TV studio, right? You would be coming and interviewing me in my office. But think of it. Say, even a simple stock like MRF, which Nimish Bhai had,
Yeah.
it's
Yeah,
22,
discussing it 2 days ago,
23% compounding over 20 years. It's a, you would think it's like a boring business. But think of it, if India is going to go from 3 million cars to 20 million cars,
It's a
from a million
no-brainer.
trucks to 3 million
Yeah.
trucks, I don't care whether Tata wins or Mahindra wins or Hyundai wins or whoever wins. Tire wale to 3-4 hi hain. Same way in the ancillary space, we've loved this Motherson Sumi for years and years. I mean, as the cars get smarter and smarter and smarter, he builds the nervous systems of the cars. The mirrors are becoming cameras, they're becoming sensors. He's doing the cockpit for he's kind of building the brain power of the car in a way to say. He's not got the software, otherwise he would be in another league.
Totally.
But if you put that together, there are just so many companies which,
I mean,
it's shortage of money actually honestly in India.
I've been meaning to ask this question that if you look at the general thumb rule for an investor, they'll say the following: buy a good business, which has good return ratios, buy at a reasonable price and hold it. But if I look at all the famous investors, Nimish Bhai's public portfolio, Radhakrishanji's public portfolio, your public portfolio, even for that matter, Rakesh Junwala's public portfolio, the thought process is the same, but the investments are very different. Why is that?
The underlying theme is you want to take a asymmetrical bet. No one makes money by buying the, what they call in horse racing terms, if you know this horse is going to come first, so does the whole world. So the odds are not going to be there. You will make money if you buy horse number 5 who may come to number 4.
Yes.
And you're looking for, kissing the ugly frog which can become the princess or whatever the fairy tale was. The prince in this
Prince
case.
actually, yeah.
Well, we think of it the other way. Right? So, sorry. But, and like our whole career was built on buying those mid caps which had characteristics to become a large cap. And if you see that character in the business and in the entrepreneur and the management team there, that's really your assessment. And you'll get a few right, you'll get a few wrong. Your batting average should be 65-70%. If you don't get a few, which go wrong, that means you're not doing enough. And that's okay for, be doing closer to my age or older than me. But when the age which the country is at 27, 28, you have to be out there buying these mid caps, and you get 2 of them right, it defines your career.
So what is your son buying? That's a better question to ask.
Yeah.
He's the one who bought Gravitas.
What
I
is
should
that
give him
one
credit.
mid cap that you think has the potential to become a large
So
cap?
we
Not
bought,
now, in the next
we had
10
spoken,
years.
we had bought IDFC for, in that context, that it's not the SBI, it's not the ICICI,
not
which
yet.
also we've done very well.
Yeah.
But I think he has the characteristics to, build something of great value over there. It's played out very well, so I'm not suggesting, and I don't really want to suggest any stock for anyone. So
Now, of
please
course,
take that as a
disclosure,
standard thing.
please do your due diligence.
Yeah,
These are not recommendations. We are
I'm
generally
talking
having a chat.
thematically about India and where it's going, and there's just so much opportunity. And I have another slide which we're doing at Flame next week. We put up pictures of Warren Buffett, George Soros, Jim Simons, and others, and say each guy became rich by doing it differently. So you don't need a Xerox copy is never valuable.
There's no one
The
formula.
original is valuable.
Yeah.
So do it whatever resonates with you and you like that company. If there are 50 companies which will become, hundreds of billions, you need to be part of one of those stories. You don't need to be in all 5 of them. So don't have FOMO. Don't chase the market. The market is actually one standard deviation still above reality today. Because if I know that India is doing well, so do a billion people.
Of course.
So you need to buy it when the mood is low. And at different points, the mood will get low. For some reason will come from abroad, something will happen with El Nino, something will happen with politics. You get a break and the entire market doesn't go. The sector or the stock you're concerned with, you just keep an eye on that. and you get it.
One follow-up question, purely related with years and years of market, what you've seen. You need to have an edge, whether it is information, whether it is behavior, whether it is intelligence. What to your mind should be an edge one should develop to be a good investor?
So, a great question, and we do this for my son as well as for the students. So the intelligence edge is gone because AI is smarter than you.
Of course.
The information edge, you better not be doing that because you'll get into trouble. It comes down to your temperament, that do you have the patience and the clarity of what you're sitting on. There's a difference in being stubborn and having conviction. That conviction comes from deep study and self-belief, not out of because I said it's right. And you have to be open to taking input from everyone and open-mindedness. And I therefore call this always that this profession is eventually it's a spiritual profession because you have to be aware of everything, and it makes you more and more introspect and get more and more humble because each time you make a mistake, it's a different one from the past. So it stops you thinking I'm so great and I'm so smart. You get whacked each time you think about that. And if you treat it as a vantage point from which you're able to observe the world and feel blessed and gratitude that you're thinking about the best things in the world, meeting the best people in the world, and you can actually sit back for days and not do anything except read and reflect. I find there's no better profession than this in the world. And that's why you can do it till you're 99 is Mr. Mangal.
Yeah.
And the brain stays sharp because you're learning all the time, right?
I mean, look at the terminology which he used this time to describe AI. Look at how he was able to predict the Bitcoin bubble just before the euphoria started. Yeah.
Absolutely. No, but I was just saying that, Manish has this amazing knack of identifying trends. Exactly a year back, he said his favorite movie is RRR. What is that now? In fact, we should, I think, go back to that picture.
Please don't show that poster ever again.
Yeah, I think we should go back to that poster. I mean, you're a trend spotter.
Never
Can we
again.
have that picture back?
Please.
Things don't change in life. Good things don't change in life. You have it there, you go.
There
Oh my
you
God.
go. Festivities on ET now continue, but thank you, Manish. Thank you for being part
Thank
of
you
all
very
our
much.
celebrations.
And wish you all the best. You're doing a
Thank
great
you
service.
very much.
Thanks.
Thank you.